Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hello, good morning, everyone. Oof.
Good morning, everybody. Suppose I need that microphone, huh?
You do. You need the microphone in order for the people to be able to hear you speak.
Oh my gosh,
And you're here to speak.
Well, now you guys get to see on video. You would have missed that if we were on audio only.
Yeah.
By the way, how is my audio this morning? Is it okay? Can everyone hear me okay? I can't hear myself.
I can't hear you either, so.
What a show. It's been a crazy week, huh, Gab? It's been a crazy week. We'll get into some of those shenanigans we've been dealing with, but yesterday was a lot better. I'm happy about it. That yesterday kind of turned things around a little bit. For today's show, we're going to try and keep things as positive as possible. We're going to be talking about positive. We're going to be talking about positive cash flow.
Ooh, nice.
Not specifically positive cash flow, but what we want to talk about is how to create more cash flow, how to create more income for yourself. If you're one of those people that really, really, really hates your job, if you're one of those people that just like you're stuck working, grinding, doing, what are some jobs that people don't like?
Cleaning outhouses.
Cleaning houses.
Outhouses.
Oh, not cleaning outhouses, but like cleaning outhouses.
Yeah.
As in like cleaning out outdoor bathroom
Toilets.
facilities.
Yeah.
Oh man. Any outhouse cleaners here today on the show? Let us know in the chat.
I just always assumed that would be like the worst job in the world. I mean, I'm sure there's probably others, but as far as my little brain can think up.
Nah.
Yeah.
Shit suckers.
Yeah.
Shit suckers. Oh my God. Yeah, if you're a shit sucker, this episode is for you because like I get it. You grind every day. You're sucking and sucking and sucking and sucking. And and you bought a few rental properties and you feel like you're going in the right direction. You're like, I just need this whole financial freedom cash flow thing to speed up a little bit. But if you listen to our episode, what was it, 2 days ago, you'd know that, we explained it's not that fast. You have to be patient in real estate investing.
Very patient.
It's going to take 15 years to do it properly.
Yeah.
But that doesn't mean that you can't find a way to start getting a little bit more freedom from your job, or maybe there could be an alternative to your job in the meantime, something within the real estate industry. We're going to be talking about different options for active income, creating extra income for you in your real estate investing business now. Some way that you maybe can make that transition a little bit faster. Because there are ways to make money in real estate that don't solely rely on your cash flow from your rental properties. We're going to talk about those different options for you guys today. What a great example, the outhouse cleaners, Gab. Is like, if there is one outhouse cleaner that's listening today, he's like, this finally, the episode for me.
Yeah. Kirsten says that she had a friend in high school that did that. Yeah. What a high school job. I don't know.
Where are they now?
What a way to start out your working career, right? Oof.
It can't get any worse than that.
Yeah. Start from the bottom.
You know what? And I would say that that job would be, do you think it'd be better in colder weather? Do you think it'd be better in the winter or worse? I think it'd be better in the winter. Like I would do that as almost like a seasonal job. But
I wonder if the poop freezes, or like if there's a solution that they put in there to keep it like, flowing through the pipes.
Yeah, isn't it just in like this little like, not a reservoir, but like a little like tub? Isn't it just in a tub and it's just to suck it out of the tub?
I don't know.
Please, we need an expert. We need an expert to help us in the chat here. But the reason why I say that is that like, we're probably coming into the worst time of year for shit suckers, because
busiest festivals,
busiest time. But I say the worst time of year because the weather is changing and the weather is getting warmer, and those things must absolutely stink this time of year.
This is true,
right? And patio season, and people are drinking lots of beer, eating wings, and melted cheese, and just, you know, the smells are just are more, stronger than ever, and the heat. Speaking of the weather, I'm curious, you know, what's the weather looking like across Canada today? Normally we just do Edmonton, but I want to hear, like, what's the weather looking like across the country today for our heroes, the outhouse cleaners?
The weather today will be 23 degrees in Edmonton, 17 degrees in Vancouver, 14 degrees in Salmo, 15 degrees in Toronto, 14 degrees in Dunnville, 13 degrees in Halifax.
Dunnville's got a music festival coming up pretty soon, I'm pretty sure.
Thanks, Evie.
Don't they? Don't they have a music festival every year? They normally get, who do they get to come out for that? What's his name? He goes, oh God.
Sing it.
The lead singer of the Animals comes out every year. Maybe it's been a while. Is he still alive? Anyways, Dunnville Music Festival.
Chris, you obviously missed yesterday's show. Like
The
Dunnville,
Mudcat.
of all places.
The Mudcat. Is that what it is? The Mudcat Festival? Yeah, that's it. The Dunnville. Wait a second. Yeah, it's coming up. It's celebrating its 50th anniversary here in June.
Mm.
Who do they got? Who do they got this year?
Are we going? We have to go now.
I mean, why not? Who's playing there?
We'll see Chris there.
Chris gonna be there?
Chris, are you going? Can we count on you?
Doesn't say who's gonna be performing. Who was it? The lead singer of the Animals that was always there. What was his name?
You're not gonna let this go.
Eric Burden. Is he still alive? Still alive?
No clue who you're talking about. I cannot participate in this conversation.
Eric Burden alive. Is still alive. 85 years old.
Wow.
Strong
Wow.
possibility you could see him in Dunnville in a few weeks. At the
It's coming up quickly.
Yeah, June 11th. Yeah, anyways. 14 degrees there today. I'd say that
You remembered the weather?
yeah, Salmo and Dunnville are 14.
Oh, both 14. Okay.
14 degrees today. So not a terrible day to be cleaning an outhouse, but
Yeah.
I mean,
Probably the perfect weather to clean an outhouse.
some might say. Some might say I don't claim.
I'm so sorry. This is where we ended up this morning. I think earlier Kirsten said, I thought this was going to be a positive episode.
Well, what we're here doing today is we're solving problems, right? And someone out there is this is I know it doesn't. I know for you, Kirsten, like you with your uppity job or whatever it is that you do, I don't even know what Kirsten does. I can't remember. She's probably told me a million times, but I'm sure it's some uppity job, some middle class. You know, I bet you go into an office every day. There are people out there. You listen. There are people out there dedicating their lives, you know, to something that's nobody else is gonna do. And so for you to, we need to highlight the heroes this morning. And what I want to do is I want to reward said heroes with some options. I want to provide a bridge. I want to bridge here, find a bridge for them to be able to create a better life for themselves, to be able to come home to their family with open arms. Do you really think the outhouse cleaners are being welcomed with open arms after a long shift? After cleaning out the outhouses, the porta potties at the Dunnville Music Festival in the middle of June in the scorching 28-degree weather? On the shores of Lake Erie? Lake Erie? No. Poor people are coming home and their kids don't even, they won't even unlock their bedroom doors. Like, not until you shower, Dad.
If you're looking for like a bailout from this conversation, I'm not going to help you. I'm just going to let you flounder.
I'm telling a story here. I'm setting up a theme. I'm really getting people attached to this because, yeah, you're right. I'm drowning. I'm drowning.
Chris is ready to move on.
Well, there's some crummy jobs out there. And the person that wrote the email in the other day was saying that he worked in the oil field. And I was like, it's bad. I mean, a lot of people hate it. I think what people hate about working, in northern BC and in northern Alberta.
I don't think they hate their job. I think they hate their shift and being away from their life and their family.
Yeah, well, they also hate shitting in shitters as well. They also hate shitting in outhouses all the time because they're out in the middle of nowhere, and you know what I mean? I get it. Mm-hmm. They're dealing with the same shit too. So it sucks being away. It sucks not being around your family. It sucks not having what everybody else has, which is the ability to be able to wake up every day, say hello to their family, go to work, come home at a reasonable hour, and try and make a life out of a life. Mm-hmm. And so regardless of what shitty job you got, everybody's got something that they're doing that they're not happy with, right? I would say most people.
Most people, yeah.
And most people get into real estate investing.
Or they're just tired of they've been doing it a long time. It's just like the mundane, you know?
Yeah.
They're
not
tired
fulfilling.
of it. It's not fulfilling. There's no excitement anymore. Maybe they did love it at some point, but now it's just like, oh my God, is this what I'm doing the rest of my life?
Yeah, I get it. I had a job in oil and gas, but I was home every day. I worked a lot of long hours, but that was my choice. But it was definitely boring after a while. I felt unfulfilled because I wasn't being challenged anymore. I hit an early midlife crisis in my early 20s. Like, I hit a midlife crisis where I'm like, is this my life for the next 40 years? There is nothing. I've been working as a child. You're constantly like next grade, and you're learning new things, and like you're getting into high school, and then you're graduating high school, and then you're college or university, and then you get your first job.
Constant excitement.
Yeah, there's always something to be reaching for. And then you get that job, but you start out as a junior, and then you work your way up and you get your tickets or you get your certifications, and then you're constantly growing. And that's what it was like for me until I hit about like 24. And then it was like, oh yeah, this is the wage that you're going to be making with some minor increases every year for the next 40 years. This is the job you're going to be doing over and over. And it was easy, and it was gravy. It was the money was easy, the work was easy. It was good. Like, I had created a level of success that most people would dream of. You know what I mean?
Yeah.
That most people would just absolutely kill for. But it was like, that's it. This is my life for the next 40 years. And I'm just like, it's not going to happen. I need to create something more. I need something more fulfilling. So I understand I was there. And then I ended up doing that job for another 9 more years after that. As I built up my real estate portfolios, I built up my businesses, and to a point where I felt comfortable taking that exit and becoming a full-time entrepreneur. I had always been an entrepreneur. I had side businesses and side hustles and things like that I was building while I was working. But, I'm right there with you, even though I wasn't, with the hose and the truck, sucking up the shit. Like, I had my own thing that I wasn't happy with, and I understand that everybody's got that thing. So the thing is that if you're trying to do it through real estate investing, through buying rental properties, like we explained the other day, it's a very slow process. It's in order to do it right, and everybody has these unrealistic expectations of how quick it's going to be. It's not. It's very slow, and it takes like 15 years to do it mathematically. Even if you buy the right properties, you get them at a discount, you buy the right cash flow. It's not realistic for someone who's never been in a position of raising capital legally. I'm going to keep on highlighting that word, legally. It's not realistic for someone who's never done it to go and raise $10 million from friends and family. Mm-hmm. You know what I mean? It's not. And even if you do, it's still tight. Like, you're not rolling. I mean, calm down. Like, it's not, even if you bought 10, 15, 20 rentals, maybe if you had $10 million worth of assets, like, it's not like you're going to go buy a Maserati or a Corvette. You know what I mean? Chill the fuck out. Like, it's like $10,000 a month in cash flow. You're basically like lower middle class now, middle class. Like, you're not rich. It takes time. Real estate investing takes time. But what if we could give you some different options? And that's what we're going to be covering today. What if we can give you some different options to start making some cash, some extra cash now? Maybe provide you a little bit of flexibility so that you don't have to work out of town nearly as much. Maybe you only have to work out of town 6 months out of the year. Or maybe you can finally switch to a job that pays a little bit less, but it means that you're home every night because you've built a side hustle or a side business within real estate that can supplement that extra income that you were going out of town to work for in order to pay your bills, in order to get little Billy to baseball and Susie to gymnastics, right? Mm-hmm. So we're going to talk about those different kind of options today. Some of them might work for you. Some of them might not work for you. It's up to you, right? But we're going to go through those different options with you to highlight them, see which ones can apply to your situation, see which ones might fit for your lifestyle, to see if maybe we can add a little bit of extra cash flow, a little bit extra cash, to your life now, so you're not forced into having to do things you don't want to do or having to work in places that you don't want to have to work. We're going to take a quick little commercial break. When we come back, we'll start getting into that, and we'll go from there.
You are a professional real estate investor. You are not a professional boxer. And you are definitely not a professional bookkeeper. Enter Fingo. Fingo is a professional bookkeeping service by and for professional real estate investors. Your life just got a whole lot easier, and your profits are ready to soar. Leave the bookkeeping to Fingo so you can focus on what's most important, finding the next deal and raising money for it. Schedule your free consultation at fingo.com.
I just want to take an opportunity to apologize for my aggressiveness towards Kirsten earlier. I was making jokes, and also I've had a really rough last 7 to 10, 14 days. It's been a rough couple weeks, eh?
Yeah.
Like, it's just
pretty bad.
Oh my God. Even when you have said freedom, or like you've built a life that's, you've got that cash flow life, that business income life, where I try not to complain about our lifestyle and what it is that we have and what it is that we built. I love it, but then just sometimes you just go through these stints, or these
little rough patches,
stretches of time where it's just like nothing seems to want to go right.
Yeah,
and it's just like it's a constant punch in the junk,
and lots of challenges for sure.
So we've just had, and some of it I wanted to talk about on the podcast, and some of it I'm just like, there's no value in me sharing any of that. If there were value, I would bring it up, but otherwise it's just Wayne just complaining about things, and there's enough of that already. So, but we had a pretty good day yesterday. I just want to talk about real quick before we get into this stuff here, because yesterday was actually just like a really, when you've just been getting you've just been getting punched in the groin for so long, it just feels like life is just using your groin as a speed bag. You know what I mean? When you've just been like enduring it over and over and over and over again, it's like brrr. When you get a good day, you notice it.
Yeah.
And just yesterday I went to, even though I stayed up quite late, just kind of like finishing up a lot of stuff, I went to bed satisfied. I went to bed just like, wow, that was great. I would like another one of those tomorrow, please. I'll take one more of those, and I'll take one more to go.
It's like you put in your morning room service order.
Yeah.
The night before.
Yes. I would like another one of those. Yes.
5:30 a.m., please.
Yeah, it was good. Like, there was just a lot of things that went right, and I was really happy for it. I don't know about you guys, what your life's been like. Feel free to share, in the chat here on YouTube, if you're live with us, what your week has been like and what things have been like. But Yeah, just been a whole lot of negative stuff. But yesterday was, I'll just share one. I mean, we got an appraisal back. Got an appraisal back. One of our joint venture partners. Sorry?
This is a good win.
Yeah, it's a very good win. One of our joint venture partners is refinancing one of our properties. And we bought this property 3 years ago. And this was always the plan. We put it on a 3-year mortgage term. It's so incredibly... it's just amazing just to see a plan from start to finish actually just
Work
to
out
know
beautifully.
that it was like, oh wow, I planned this out perfectly.
Yeah.
You know what I mean? I knew that there was a reason why we chose a 3-year mortgage term, because we anticipated the interest rates to be where we wanted it to be at this point. And we also anticipated the values to be exactly where we wanted it to be at this point. So like when we bought this property, and it looks so good for like the joint venture partner too, they're just like, oh wow, you were literally right about everything. And it's so cool to be able to be like, yeah, of course, obviously. But we bought a property for just a really good price, and we saw a huge opportunity in that, the value going up. We also saw a huge opportunity in the rents going up. We also knew that, we bought the interest, we bought that interest rates in 2023, which was arguably the worst time for interest rates in a very long time. But the property still cash flowed
really well.
really well throughout that whole run of 3 years.
Yeah.
That was the cool thing. And that's like, I feel like if the property didn't cash flow as well, or if it didn't have the rents that it did, and we didn't get it for the price that we did, I don't feel like the joint venture partner would have been on board. You know what I mean? But just to show them, hey, we're buying a property right now with arguably the worst interest rates that we've had in the longest time. And it still cash flows really well, and it's still going to be profitable. Just take my word for it. And he did. And, now we're 3 years later, the mortgage term came up for renewal. I said, okay, well, let's go to the bank and because I knew the value is worth more, significantly more. And I said, let's get them to run an appraisal and let's see what value they get. And then we'll see what kind of money we can get out of this. And the appraisal came in approximately 10% more. The value of the property was 10% more than what we were expecting.
Not than what it was, than what we were expecting it to be.
Yes. Maybe I'll give real numbers. Here. I don't remember. I'm just trying to remember what the exact numbers were. So I'm just like, so we bought this property for $179,000. Okay. Cash flowed approximately $250 a month, something along those lines with those interest rates. $179,000. So he put down, actually it's $179 or $171, doesn't matter. $179,000. So he put down about $36,000 for the down payment on this property. Cash flows $250 a month. Great deal. We got it at a great price. The property now, I thought it was going to be worth like $210 or $220, which is fantastic if you think about it. That's what is that? That's $30,000, $40,000 more in value in 3 years, right? Turns out the appraisal came in. I could not believe this. Appraisal came in at $240,000. And they structured it. So we refinanced it. We structured it with a readvanceable mortgage, which means that part of it's going to be fixed, but then the other part of it is going to be on a HELOC. So we're going to be able to access those funds whenever we want to grab it, right? Are we frozen? Get this edited later. Okay. We're good?
Bonjour. Okay.
Okay, perfect.
Fabian
Okay.
says goof instead of good, but
Okay.
we're here.
Who you calling a goof, bud? Anyway, so what we ended up getting was we got a readvanceable mortgage on this, which is actually really good. It's a great mortgage product because readvanceable mortgages really quickly. It's every mortgage payment that you make, there's a portion that goes towards interest and a portion that goes towards principal. We're paying down the loan. Well, when you get a readvanceable mortgage, the portion that goes towards interest gets paid to the bank, but the portion that goes towards the principal, which would normally pay down your principal, it does that, but it automatically becomes available on our line of credit. So every time we make a mortgage payment, let's say $1,000 mortgage payment, $500 of that is automatically available to be pulled out on the HELOC. So we
you're
can
able to access your equity.
access your equity immediately after you've paid your mortgage payment. So it's a really cool mortgage product. But anyways, we structured it with a readvanceable mortgage there, which is great. So upon closing, which I believe is in July, remember our joint venture partner invested $36,000 approximately. Okay. Once we've done this refinance, he's not only going to get his $36,000 back on July 10th, I believe, or July 1st, when this becomes done, we're going to have $57,000 accessible immediately. So within 3 years, our joint venture partner is going to get all of his money back, his initial investment, plus an additional $20,000 on top of that, which is an additional 66% of his money, which is just, I'm just so incredibly happy for that. And the property still cash flows after. Yeah. It still cash flows and it passes the 5% rule afterwards. So what we're going to do is we're going to take that $57,000. We're going to go buy another property. We're going to roll it over, right? That's what we were talking about, before, about like buying a property, letting the equity build up, doing its thing, taking the money out, buying another property. That's exactly what we're going to do. So
real life example.
It's a real life example of a property that, we just did, we're about to do. And so there's tons of opportunities like this, guys. It does work. We are literally out there doing this every day. And
also, Wayne, what I love about this is that that was an example also of patience, but also not a crazy amount of patience. Like 3 years is relatively quickly, actually it's very quickly to be able to access that kind of money and to see that type of appreciation in that property. So, but it also, like, a lot of people get into real estate investing and think like that they're, like we talked about, that they're going to be like rich quick, Yeah. But this is just an example. It's like, if you can just hang on for a little bit and just be patient, sit back, let it do its thing, this is what's possible.
Yep, absolutely. Yeah. And some of you guys are like, well, that's not scaling. I'm like, what are you talking about, bud? You just have to buy 10 of them. Why don't you do like exactly what I did and buy a bunch of them? Instead, you got a great rental property. And by the way, appreciation's not guaranteed. Never said it was. There was a high probability of it. And that's why I jumped on it, because I knew that. But it was still profitable regardless of whether it went up in value or not. It was still making a minimum 20% return on investment every year. Yeah. And it had strong cash flow, so I could weather any potential storm, i.e. the interest rates being like 5.8 or whatever it was, 6.2. Right? So if you can buy properties that are profitable, regardless of whether they go up in value or not, that's the game. But buy them that have a high probability of appreciation. So this one was profitable regardless, had high cash flow so that we were stable and we could ride out the waves. Additionally, it had a high probability of appreciation. And guess what? It happened. Yeah. And so I was able to benefit from that because I took that risk. I took that very calculated, very smart risk. Right? Yeah. And we bought lots of them. And so therefore, this is not the only joint venture partner that is going to be appreciating this. All of our properties are going just like this. And we're going to be refinancing all of them within the next year or two when all these mortgage terms come up for renewal. And everybody's going to get to keep on compounding that success. And that cash flow is still going to be there because we bought it right. I'm just saying, like, I can't stand people that say like, oh, it's the mini little deal. I'm like, what are you talking about? Just buy more of them. Yeah. So you would rather buy bigger and get shittier returns than buy smaller and get great returns. It's you're just being stubborn at this point. But anyways, it looks like you had something to say.
Oh, it's passed.
Yeah. I'm just so incredibly happy with it. Our joint venture partner's really happy with it. It shows what's the term I'm looking for? It shows that it works, right? Yeah. And we've been doing this for so long now, and everything we've done since we started has been successful. And we hope that by sharing our successes with you, real life successes, whether they be 15 years from now, 10 years from now, 5 years from now, or what's working right now, we're here showing you the receipts so that you can see that, okay, cool. You don't have to go with the new flashy, gimmick. They're like the fast cash thing. There are safe, reliable, tried and true ways of investing that pay off. And you don't have to risk the whole house or the whole farm for it, right? You don't have to become another statistic. You don't have to become another person who makes the news for losing everybody's money, right? Like we see time and time and time again.
Yeah.
We're here showing you the receipts. We're here showing you this so that you can actually see proof that it actually does work, and you can do it safely. So,
well, Wayne, I will say what I was going to say. What I was about to say in that moment, and I felt like it had passed, but I'm going to go back to it, was that also in this instant, we didn't need to do a value add. We didn't need to renovate it. We didn't need to add anything to it. We didn't need to, dump a whole bunch of money into it. We literally did nothing. We purchased it. I think we cleaned it and did a few handyman repairs when we took possession, which is very normal when we pick up any property.
$700 worth of repairs.
Yeah. And then we put in a tenant who has actually been there since the day we took possession. Same tenant has been in there. So we've literally done nothing to this property. We didn't need to, buy a building and go in and renovate all the units. Like, this was just like plug and play and wait.
It really is that simple.
Yeah.
You're
But
right.
it comes down to buying the right asset classes like Wayne talked about, where there is that potential for that appreciation and where it did run as a really nice business in the meantime to get to where we are.
Yeah, we saw a huge opportunity, and so if you understand the fundamentals that we teach, you'll be able to spot these opportunities too. Will this opportunity be here forever? No, it absolutely will not. I mean, it will dry up, and then we'll have to be able to spot the next opportunity. But you see, I don't want people to be like, "Hey, man, so where'd you buy it? Would you tell me exactly what to do?" I could tell you, but then like, how does that help you? You're not like, once this one dries up, you're not going to be able to know what the next one is. You got to be able to spot these opportunities ahead of time. You got to be able to spot these, to know what's next. Actually, ironically, tonight, I'm speaking at the Edmonton Real Estate Investors Association, and I'm going to be talking all about this. I'm going to be talking about what's working right now. I'm going to be talking about how I knew in advance that this was going to work years ago, because I can understand the trends. I understand the history of real estate. And it's once you understand how to spot the clues and the little indicators, it's very easy to read, right? It's just a new language, right? It's like learning to read code. Once you understand it, it's very simple for you. So the fact that I understand history, the fact that I understand what worked before, what didn't, and what's working now, I can spot what's coming next. I can understand where the next big opportunities are. Not guaranteed, but what has the highest probability of success, right? I'm going to be talking all about that tonight. If you guys haven't got your ticket already, go and it's going to be one hell of a presentation. And it's going to be very laid back, fireside chat. So it's just going to be a discussion. It's not going to be a slideshow presentation. I'm not selling anything there. I'm just talking about what's working right now in Edmonton and what's coming in the future, what the next big opportunity is. And get a fucking sitter. It's worth it. Seriously. It's going to, like, I'm telling you right now, it's worth it. But, okay. So let's switch off and go back to, so I'm happy. I guess I had a good day yesterday. It was nice. It was one of many things that happened that went right yesterday. We're also evicting a tenant. That was, it's funny. It's like, oh, everything was great yesterday, but I also we filled out paperwork for an eviction as well. So it's anyways. I digress. This, back to what we were talking about earlier in the episode. As you're building your real estate portfolio, it is not all sunshine and rainbows. And I feel like, sometimes, people feel like, oh, I'm going to get my first property, or I'm going to get 3 properties, and I'm just going to feel so happy every day. It's not. It's a lot of shit. It is still, it's just new shit. You're dealing with tenants not paying rent. You're dealing with a tenant that says, because you're not renewing them, they didn't want to pay the last month's rent. And they said, I'll just take it out of my security deposit. We're dealing with a tenant just like that right now, where they told us to take it out of the security deposit. And they haven't really responded to any of our messages. I don't even know if they're going to leave at the end of the month. I don't want to go and try and find a new tenant to replace them, because I can't say for certain whether this previous tenant's actually going to be gone. Doesn't sound like they're going to.
I don't think they are. Yeah.
I don't think they are either. So now it's going to be a month worth of vacancy. And now, there's just a lot of these headaches and things that you have to deal with that are outside of your control, that are part of real estate investing. And it could be draining. And while you're building this portfolio and while you're, sorry, what I was going to say was that can eat up a lot of your cash flow too. I just want to make that point. There was a side note I was trying to make there, was that can also eat up a lot of your cash flow, meaning that, like, you know, if you think that you're going to be able to spend your cash flow, well, surprise, there's a month of vacancy, and that's going to chew into your reserve, and then you got to replenish that reserve. And there's probably going to be some cleaning and repairs to go with that. So you can't really always rely on your cash flow in your rental portfolio, even if you had enough properties. You should never rely on it. My personal belief, regardless of what approach you go with this, whether you're building your portfolio to get to a point where you can live off your cash flow, or you've already got a portfolio where you can live off your cash flow, my personal belief is that you should always couple it with active income. There should always be an active income component and not just a passive income from cash flow in your portfolio or in your cash flow distribution strategy, okay? Your financial freedom strategy, whatever you want to call it. I truly believe that there should always be active income components. I'll pull back the curtain a little bit just for what we teach to our students. We don't actually teach any of our students to to live off cash flow from the rental properties. I make it very clear from the beginning, if you're here to live off of cash flow from your rental properties, this isn't the right program for you. It's not. I'm sorry. And I can't in good conscience, tell you that that is a realistic approach. Sometimes on a podcast, I could be like, yeah, absolutely, buy lots of rental properties and yeah, you figure it. But like, that's a very generic coaching. I said, I'm pulling back the curtain here with what I teach people in our REI Master's Mentorship Program. Realistically, I don't think even if you could, I don't think it's the right way to do it. What I recommend is that they treat their rental portfolio like their long-term investments for the future, for their kids, for their retirement. And then if you want freedom, if you want to be able to leave your shit-sucking job, then build a business. And the thing is, though, is that most people don't know anything about building businesses.
Yeah.
Most employees, all they've ever done since they graduated was put a hose in a hole and press the suck button, right? And other people, all they've ever done is they've taken their 12 wrenches and they turn the bolt. You know what I mean? And that's fine. You know what I mean? You're skilled at whatever your craft is, whatever your skill is, whatever your trade is. But most people have never been in a position where they needed to start something for themselves, where they needed to be their own boss. But I think that just because you have never doesn't mean that you can't. Right? I never knew anything about it. I didn't grow up as an entrepreneur. You know what I mean? I always had, looking back, you could see entrepreneurial tendencies. You know what I mean? Always wanting to start and do your own thing, right? And some of you guys, I'm sure you guys are like that. How many of you guys have been the type of people that have always wanted to do your own thing or create your own thing? I've talked to a lot of you. I know you have. But I wasn't trained or no one ever taught me how to do it. I just figured it out on my own. And so I say that to say that, like, if I can do it, you can do it too. Right? But what I like is that if you're building your real estate investing portfolio anyways, and you're honing your skills and you're, developing as a real estate investor, understanding things better, building that experience, building your portfolio. If you're going to build a business that provides active income, my recommendation is to build it within this industry, within this space. So that as you're building your portfolio, as you're building your experience, you could do it, simultaneously in a job or in a business that complements that. So in your business, whatever it may be, you're also simultaneously learning more about real estate investing. And a great example I'll give you out of the gate is becoming a realtor. That's what lots of people do. They hate their job. They want to get into real estate investing. They go and they get their real estate license. You get your real estate license, and then it forces you to learn about neighborhoods. It forces you to learn about different property types, about square footages, about negotiating and those types of things. It's a great complementary job or business that you can build while you're learning about real estate investing.
Wayne, can we just like backtrack for a second here? Because I think that there's something important that maybe we haven't really quite said out loud. Maybe we did earlier in the podcast when we were kind of introducing the topic. But I think it's important to say that what we're talking about and, building active income, to complement your investing, this is for people who are really wanting to exit their career.
Yeah.
It's not like we're not talking to people who have a full-time job. They're also investing or trying to start investing. And then now we're saying, but you shouldn't just invest. That's going to take too long. You should also start an active business and become a realtor on the side in your spare time,
Right.
which obviously you don't have, right?
Well, some people can, but
Some
finish your
people
point.
can,
Finish your
but that
point.
would
Finish your
be
point.
that would be a lot. So we're specifically talking to the person who thinks that by investing in real estate, they're going to be able to quit their career.
Right.
That their investing is going to give them the cash flow and everything they need in order to supplement that income so they can leave their job. I think we've made it crystal clear that that's not realistic.
Right.
That investing takes a really long time. It's a wealth builder, right? Yeah. So we're talking to the person who's trying to exit that and can't just solely rely on that cash flow of their investments. They need something else, right?
I will say as well that I'm also talking to the people that need a little bit more flexibility. So,
Yes.
Let's just stay on the example of getting your real estate license. Not everybody is a full-time realtor or real estate agent. Some people can do it passively, just kind of helping out some friends and some family, or maybe some other investors that are in their network and helping them find properties. And then you maybe do one deal a month or something like that. But that can add an extra $30,000 to $50,000 a year. And that might be the difference that you needed, that extra cash that you needed to not have to work out of town. Mm-hmm. Now you can take that job that pays a little bit less in town and be around and be, present for your family, right? And then as you build it, maybe you start to see a point where it's like, okay, actually, if I were to put an extra 50% of energy into this realtor business, maybe I wouldn't need to do this other job at all. And I like the flexibility that I have with this realtor business so that I can be more present. I can choose my own hours, right? I can take the clients that I want to take or just refuse if I want to, right? And so that provides me the flexibility that I want for my life, to be more present for my kids, to be at the baseball tournaments, and to be around, for my wife or for my husband, right? So that's just one example of like how there are careers or businesses that you can build within the real estate industry that can complement what it is that you're doing. And it's not like you're trying to create something completely different, like, I don't know, I used an example yesterday, drop shipping. You know what I mean? Like a drop shipping business is completely different. Now you're sourcing materials and you're negotiating with different distributors and things like that, and you're trying to build out your Shopify store or whichever the fuck. You know what I mean? It's not complementary to real estate investing. It's almost like now you have two extra side hustles, which is way too much with your life as is. But if you stay within the real estate investing space, it's being a realtor can be very complementary to learning about real estate investing and spotting really good deals and then picking up those deals.
And it keeps you in the community. Something else pulls you away. It's like a distraction from what you're trying to do. Whereas these careers or these side hustles that we're talking about here keep you in the community, keep you engaged in the real estate investing world, and hopefully are also inspiring you to keep investing. Because something that I do see is, and I think I see it a lot actually with realtors, is that people will become a realtor thinking, okay, this is great, this is going to keep me, in this world. But then it's like it takes over and they forget all about investing.
Oh yeah, like
it's almost
almost
like,
95%.
investing is too hard, but I'm just gonna become a realtor, and it feels like I'm in this world, but really you're not. You've given yourself a new job, which maybe is great. Maybe that's what you needed. You just needed a new career. Yeah. But it's not investing and it's not building long-term wealth, which I think is why we arrived here in the first place, right?
Absolutely.
Yeah.
Absolutely. I think that, again, they could both be very complementary.
Yes.
Your ability to be able to get access to deals faster, the network of knowing more realtors and knowing what's coming down the pipeline. You know what I mean? It is very beneficial. Realtor is just one example. I mean, mortgage broker can work as well. I mean, it's not really tied directly to real estate. It's more on the financing side. I don't think that you're going to get any real true benefits, as far as, you're not going to get better financing. So like, it's not going to benefit your real estate investing side, but you are still in the space. Like Gabby said, you're still networking with the same people in the same community. So, becoming a mortgage broker could be another great example too. And it provides that flexibility of being able to work from home, to be able to leverage the existing ecosystem and network that you've already created. Yeah. Hey, if you already know all these real estate investors, well, now you have an opportunity to service them by providing, financing options for them or brokering financing options for them. So it's not like you're starting from scratch trying to find a bunch of new clients. You already have a huge network of people. It's just a matter of just networking with them and just letting them know that, hey, I'm a broker with such and such now, and I can help you get good financing. And I'm investor focused because I'm an investor too. So it could be very complementary with the fact that you already have that existing network. Mm-hmm. Another option I've seen a lot of people do, not a lot, but I've seen some people do, is photography. If you're already skilled as a photographer, maybe you did it in high school or you went to school for it, but then you kind of dropped off because you realized that photography isn't exactly the best paying career in the world. Mm-hmm. And so, maybe photography is something different that you can, again, utilize that existing network that you have, to do staging photos for realtors, or perhaps do photos for people's rental properties. Yeah. Right? Perhaps do video or drone footage and things like that for builders and developers, right? There's lots of different options there. And again, it's an extra income source for you to do on the side that hopefully can provide you a few extra, $10,000, $20,000, $30,000 a year to provide you that flexibility so that you don't have to do the things that you don't want to do. You're not forced to do jobs or work in places that you don't want to work just to put food on the table. Yeah. And you get to stay within this existing space. One other one is a staging company, right? Perhaps maybe you got an eye for design. I certainly don't. I would have never done this. I struggle with it. Gabby has a much better eye for it, and she's typically the one that kind of deals with the decision making when it comes to staging. But perhaps you got experience with that, and maybe you want to rent a small space where you can keep 2-3 different loadouts of different staging materials, and you can offer staging for realtors in the area, or you can offer staging for real estate investors, maybe if they're doing fix and flips, right? That could be very beneficial, and it's not a whole heck of a lot of work. It's certainly not a whole heck of a lot of work. From the people that I've talked to that do it, they're like, I just love doing it. Yeah. I love going and shopping and finding new pieces that can be added into each loadout, which it's very fulfilling.
Yeah. And a lot of stagers actually just lease the furniture and the items now. So it's not even necessarily that you need to have like a warehouse space full of furniture that, you're worried about, is it going to go out of style? What's next year's trend going to be? What's next year's color going to be? Wow. You can actually just lease it. So, and yeah, like Wayne said, it's kind of like you go in on a day and you set it all up, which, is quite a bit of work. It's like almost like you're moving in, except, a few less rooms. And then it just sits there for a month or 2 months, however long it's there. And then you go and you pick it up and take it away. Right. So, it's not like every single day you're out there hustling, but, it's interesting. And I think that for somebody who, like you said, has an eye for design and is interested in design and maybe has even pursued that education, it's a really fun option.
Yeah. So like, I'll give another example. A contractor. Contractor doesn't necessarily, it's not really in the real estate space, but you are dealing with people who are, depending on what type of contracting, it could be electrician, it could be HVAC, it could be flooring, or just a general contractor, somebody who does repair work, handyman work, or renovations. Again, utilizing the existing and leveraging the existing network that you have to find clients. Mm-hmm. If you started a completely different business in selling water softeners, you're going to have a hard time trying to sell that to a real estate investor. Yeah. No, I don't give a shit about how hard my water is in my rental properties. Like, I'm not going to make that investment. Even solar, and some people have tried to do solar in the real estate investing space, and it's like, I don't see the payoff. Mathematically, it doesn't make sense because I'm an investor. I'm looking at this from a financial perspective, from an investment perspective. So you're going to have a hard time trying to sell me a solar package. You know what I mean? I don't care how south-facing it is. It doesn't make sense. The math doesn't math for me. But being a contractor, you know, someone going to be, hey, man, I offer contracting services. You never need handyman stuff done when you got move outs, or if you're ever looking at doing a renovation, you give me a call. Wow, I know a guy that understands real estate investors. I'll call him, right? Because they understand that I'm not a cheapskate, but I'm frugal. I don't want to overdo renovations. You know that I need what I need. I don't need anything more. Let's just keep it simple, right? And I like to work with people who speak my language. So if a contractor would do really well in this space if they already have an existing reputation, as a real estate investor, I'm more inclined to call them because I know them, I trust them, and I know that they speak my language. So contractor's another great one as well, right?
Yeah, I can think of so many more.
Well, I'll give you one example of one that I chose. And this was on my mind for many years, and it was because there was a lacking in the industry. And it's funny, I talked about going to college and university a little while back. Many of you guys probably don't know this. I went to college originally college to upgrade some things and then eventually go to university. That was the whole plan. I did that to become an accountant. True story. Wayne was going to become an accountant. I went to school, but I was just talking with someone about this recently. I didn't go to school. I think I went for 3 classes, and then I eventually got to the point where it was they were contacting me you're not even showing up, and then eventually I told everybody, I'm just not going. So yeah, I'm done. I this charade of me leaving every morning and loading up my coffee and okay, I'm off to school, and then not going to school. I'm not going to put on this charade anymore. I just eventually told people I'm not doing it. It's not my thing. So I went to school to become an accountant. I paid for the courses and everything. And then I was very interested in it, but what I ended up doing was I talked to a friend who was a little bit further ahead than me, and they told me what their life is actually like as an accountant, and I'm just oh no, I'm not interested in that. I had entrepreneurial tendencies. I thought I would be getting into business. I'm going to be a businessman. I'm going to create businesses and things like that. It wasn't for me. But it's funny, as I started developing my real estate investing business, I did recognize that there was a huge lacking in the industry for qualified investor-focused accountants. And, we had our accountant that we were working with, and we kept referring people to him, and he was fantastic. But he eventually got to the point where he's like, hey, stop sending me people. I'm like, what do you mean? He goes, I don't have any more. I can't take on any more clients. You sent me too many. And it was that moment I'm just okay, this is a serious issue. And I mean, he was good as well, but he wasn't a real estate investor. He was a very smart guy, and he understood our language. But I'm like, this is a serious problem in our industry, and there's a lacking, and this community needs people who actually understand real estate investors, real estate investing, and how to properly structure things, how to properly set up your bookkeeping, how to properly make sure that you're getting the best deductions possible, and also planning ahead and being proactive, in the way that I like to do it, in the way that I teach. Yeah. So what I ended up doing was I partnered with another real estate investor who was an accountant, and we built Fingo. We built that just almost 3 years ago, and now it is one of the top real estate investor-focused accounting firms in Canada. Right. And it's just another example of how you can take your existing network, right, and you can build a business that can support your network, right? And now we've been able to do that. I've been extremely successful. Shout out to my business partner, Steve Sonev. He's fantastic. Most of you guys are using Fingo, which is great. If you're not using Fingo, go to fingo.com, FINNGO.com. Fantastic, great team that we built here, and we just finished tax season. It went fantastic, and just another example of how if you have skills. Thank you for the shout out of Fingo there in the chat there. I see that. If you have skills, if you're an accountant, you're a real estate investor. There you go. You know what I mean? You can take that and you can make extra income, and you can do it in a space that you already know, and that if you want to be more in that space, as opposed to maybe doing like fucking audits or something like that. You know what I mean? For the government. Because some people, they'll get into accounting and then they'll be like, oh, I didn't realize it'd just be auditing companies every day and dealing with people who don't have all their shit straight. You know what I mean? Maybe you'd rather work with real estate investors because that's who you want to be networking with. That's the discussions you want to have. You want to see the cool, creative things that other real estate investors are doing behind the scenes. There you go. That's fulfilling.
Yeah.
Right?
Yeah.
So just another example, a business that I created, right?
Yeah.
So I got two other options for you. And these are a little bit more standard, but maybe you've never thought about these before. Arguably, I would say this would be arguably one of the most common active income strategies that real estate investors typically do when they're getting started and they want to get into the space and they want to create more fast cash. Wholesaling. Wholesaling real estate is probably one of the most common ones that people get started with. It's the one where you don't need a whole heck of a lot of money to get started. It's the one where anybody can do it. You know what I mean? It's not that hard. Oh, no, sorry. It's easy. It's not that difficult, but it is hard work. It's a hustle.
Yes.
It's a grind. I'm not going to lie to you guys. Most people fail in wholesaling, but it's a very common way to get, if you know what you're doing and you build out your wholesaling business right and you treat it like a business. So like our students know how to build a wholesaling business properly, right? If you build it properly, it can be very lucrative and it could be a great alternative to your job, or you can do it as a side hustle, start building up that business, start building up that recurring, building up that list of buyers and building up that marketing funnel and sales funnel to a point where it starts really just working on its own, and building out your team to a point where perhaps if it's working on its own and it doesn't require a whole heck of a lot of work and it's steady, then maybe you can take that full exit from your job and run your wholesaling business full time. I don't recommend anyone leave their job just to do wholesaling full time. It's a terrible idea because in most cases, most people aren't successful in the first 12 to 24 months. It's a slow grind, especially when you're starting with like little to no money and you're not putting any money into marketing and you don't have a team. It's very labor intensive and it's hard to get your first deal. And even when you get your first deal, it doesn't mean the next one's coming right away. So I always recommend that people slowly ease their way into wholesaling. Expect a 24-month, period where you're not going to get anything, but that's your growth phase. That you're building your foundation. You're building the framework for it, so that way you can start really harvesting later on after that 24 months. But wholesaling's fantastic. We have mixed opinions on wholesaling, but do you think that it's a great way to make extra cash for someone who wants to? Yeah.
Absolutely. I think that there's so much opportunity, and that when you do become, I guess I want to say successful at it, but like when you get the hang of it, when like that first one comes through and then you're like, oh, okay. And then the
you
next
reinvest
and the next.
that.
Yeah. And it just like when it starts happening, because that's a lot of people quit before it really starts to happen.
Yeah.
Right. Because it is a lot of upfront work to get going and to build your buyers list and all that kind of stuff. But once it starts happening, you can like wholesale a deal for like, I'd say at minimum $5,000, but at maximum, we're talking like, sometimes people wholesale deals for like $50,000. If it's crazy, insane deal, like upwards of $100,000. And so like when you hit one of these paydays, even if it's $10,000, $20,000, and you hit one of those, it's like, that could be a month or two or three, depending how you're living, worth of your living expenses. So I just think that like once it clicks, and so many people stop before it clicks, but once it clicks, it's incredible. It's absolutely incredible. And we wholesale lots of deals throughout the year that like we don't even intend to. It just kind of happens. So.
Yeah, I mean, I do it all the time. Whenever I've got deals that I can't close on or I don't have a partner, at that particular time to get financing, if I got a really good deal, and I know how to find really great deals, sometimes I'll just call up people that I know that are looking for the same thing and 5, 10, 20 grand, right? Depending on how good the deal is, and we just make fast cash, easy. Yeah. You know what I mean? So you don't even need to have like a marketing funnel or putting out, door knocking or flyers or things like that. Sometimes you can just have access to a really good deal. You got it locked up and someone that's looking for it. Yeah. And you just reach out to them and say, hey, it's yours. 10 grand, 15 grand, 20 grand, right? Or even just $2,000, right? And that's extra cash you could be putting in your pocket right now while you're doing exactly what you're doing anyways, just out looking for deals, right?
Yeah.
And again, that might provide you that flexibility to not have to do the work that you do or be where you have to be in order to do that job.
Yeah.
Right? You talked about $50,000 there a minute ago. The first thing that came to mind was actually a good buddy of ours, one of our students, Matt Legere. He wholesaled us a deal last year.
Yeah.
He made $50,000 off of it.
Yeah.
I paid him 50 grand for the deal.
Happily paid him 50 grand for the deal.
Happily.
Yeah.
Happily. He gave me a deal.
Yeah.
He gave me a deal. To be honest with you,
He won, we won, everybody won.
he was actually going to be making, I don't know if I should say this or not, but whatever, fuck it. He should have made closer to $75,000 to $100,000 off that deal. Just finding a really good deal, locking it up and selling to somebody else. He gave us a really good deal because of the complexities of the deal. But we were very happy with it. And I was happy to take that, like Gabby said.
Yeah.
Right? And so that's just one example. You find one deal like that every year, 100 grand, done. You know what I mean?
Yeah.
It's really that simple if you're willing to put in the work. And I'm not downplaying the amount of work and marketing that he puts into his business. So he's a
He's got what it takes.
He's a gangsta when it comes to wholesaling. He's the best in Canada, hands down, one of the best in Canada. Oh, he is the best in Canada. I'm going to say it. I know all the wholesaling companies. He's the best. And because he built it like a business, and he left his job in oil and gas and built out the biggest wholesaling company in Canada.
Yes.
Within just a matter of a few years. So it's possible. It works if you build it right, if you know how to do it, right? Mm-hmm. And if you're willing to dedicate 100% of your energy into it. The last one I'm going to share, and because I know we're over on the show, is another very, very common one. This one requires a little bit of extra cash. I say a little, I mean a lot of cash, because that last one that I want to share with you is fix and flips. I love fix and flips. Love them. Hella risky though. Very risky. And I see a lot of people go busto and fix and flips because they just don't know what they're doing. And they just think that they can buy any piece of shit property, throw a little lipstick on it, new cabinets, new flooring, new paint, and suddenly I could sell it for more. It doesn't work that way. Fix and flips are a lot more complicated than that. You really, truly need to understand your market and understand what price you need to pay for it, what your renovation budget should be, and how much it's actually going to be worth afterwards. And if you can understand those figures and put it all together and make it profitable, you will succeed. If you just wing it and you don't get the proper education, you don't get the proper coaching, you will 1000% lose 50 grand. Like that. Like that. It is, I've seen so many people fail at fix and flips. We had in our market in Edmonton, we had a big fix and flip run 4 years ago. It went into 2023 as well, but it was mainly in 2022, 2023. There was a huge fix and flip run. It was fix and flips were working in our market, and we were to thank for a lot of that because we were putting out a lot of content. We were doing a lot of fix and flips. If you look back on our education back then, it was heavily focused on fix and flips because it was a big opportunity for fix and flips. So we taught a lot of people how to do it, but there were a lot of people that just ignored us and ignored our coaching and just tried to do it themselves, and they lost a lot of money. So I will say that fix and flipping is a great way to make extra cash. However, you need to know what you're doing. You need to get proper education and guidance. And I say all of that as a preface because our market is actually heading into, and I'm going to be talking a little bit about this tonight if I have time, at the Edmonton Real Estate Investor Association at the Fireside Chat. I'm going to be talking a little bit about some future opportunities and some opportunities right now. And one of them, since you stuck around to the end of the episode at the 1 hour and 7 minute mark, if you lasted this long, I'll let you in on a little secret. We do have a big fix and flip opportunity here right now. And even more so, I'm anticipating into the fall and winter. I wouldn't be buying fix and flips right at this moment because we are in May, almost in June. If you bought one right now, you get in the middle of June, you do your renovations, then you'd be selling it in the middle of November. Don't sell your fix and flips in November. That's a very easy way to lose a lot of money. Mm-hmm. But if you bought it in November and you sold it in March or April, It'd be perfect time. Now, the stars seem to be aligning. The ducks seem to be forming in a line and getting in a row. Quack. That there could be a fix and flip opportunity in our market and in a couple other markets in Canada as well, I've seen. And again, this is what I said earlier when I was talking about understanding trends. If you can spot trends and you can see the indicators, you can spot opportunities. There is a window here potentially for fix and flips. And so I prefaced all of it with scaring you guys about fix and flips and the risk and losing $50,000 because I'm really just making sure that you're ready to cross the road, right? I'm going to let you cross the road, but I want to scare the shit out of you before I let you cross the road on your own. Before I let go of your hand and let you cross the street by yourself, I just want you to know a bus could kill you. Okay, I really want you guys to understand that. It's a great opportunity to go to cross the street, go to the store by yourself, right? I gave you $1. You can go buy a nice candy bar. But just please be careful when you're doing fix and flips. It is a very, very dangerous strategy. And dangerous because people, they don't look both ways when they're doing fix and flips. But fix and flips is a great way to build some active income. Again, while you're in the real estate investing space, you're already out there, you're already networking, you have access to, off-market opportunities because you're talking to people at networking events. You're looking at deals on the MLS. You're looking at off-market deals because Matt Legere sent you his wholesaling email newsletter, whichever. You know what I mean? It's a great way you could make, $20,000 per deal or upwards of $100,000 per deal or even more depending on how good the deal is, right? And if you build it out like a business, you build your team properly, you know how to run your numbers, doing 1 or 2 deals a year could supplement most people's income, right? If you build it out like a business where you plan it, where it's like, okay, I'm going to do 1 project between January and June. I'm going to do another project between July and December. You do 2 deals every year and you make 40 grand or 50 grand per deal. It's 100 grand a year. Easy, super simple, right? And a lot of you guys would have a lot of fun doing that too, right? How much do you love fix and flips? Okay, to make it a simple answer.
I medium love them.
You medium love them?
I love them and I hate them. I love them and I hate them.
You love the idea of it, but until
and
you're
the
in it.
finished product, but I do not like doing it.
We're also incredibly busy with all the different businesses that we have.
If I had nothing else going on, I could get into it.
Yeah, 1 every 6 months, and you were doing nothing else.
Oh hell yeah!
Oh yeah,
yeah.
And money wasn't an issue, and you weren't concerned about profit.
All day, every day.
Okay, you do it all day, every day. It's fun. Everybody loves doing fix and flips. They love.
Not while you're super busy.
Not while you're
doing
doing everything else that we're doing.
While you have other stuff going on.
Hence why you don't see us doing many fix and flips.
Yeah.
We just it's
even this one little renovation. I'm just like, ugh.
Oh God.
Yeah.
But yeah, fix and flips is another great way, another form of active income. So for the person that emailed us the other day, and for those of you guys that are that were misled or maybe misunderstood what real estate investing was, you still can create that freedom. You can still create that active income, that cash flow. Just don't rely solely on your rental properties in the first 15 years. And if you really, really need that flexibility, you really need to get out of your job because it is affecting you, it's affecting your mental health or your physical health, then there are options within the real estate investing space for you to create extra income, to provide a little more flexibility, to work less, or to make that full transition out of your shitty job, your shit-sucking job, to something that's a little bit more fulfilling and in a space that you really enjoy and that you love, right? Yeah. So don't get too discouraged by everything we say on the podcast. There are options, and if you guys want to learn more about those options, just reach out, keep asking questions, email us. You can email us and we'll answer your questions on the show live every morning on YouTube. Email us at info@reimorningshow.com or reach out to us. Go to our website, www.reimasters.ca. We have a great 12-month mentorship program. I will literally tailor your goals and your strategy specifically to you in real estate investing. If you want to buy rental properties, we can buy rental properties. You want to raise money for your rental properties? I will show you how to raise money for rental properties. I'm very, very good at it. You want to find off-market deals that offer seller financing? I'm very, very good at it. Seller financing is my jam. You want to start a rent-to-own business? I happen to know quite a bit about that as well. You want to do fix and flips? I've done many. We don't like doing them very much on our own, but I can teach you how to be successful. If you follow my guidance, I will 1000% teach you how to be profitable. Oh, hey, you want to build a wholesaling business and be one of the top wholesaling businesses in Canada? I can absolutely fucking teach you about that too. Or anything else. You want to do the burr strategy? You want to be like Samuel Huberdeau in Edmonton? Doing 3 burrs at a time? Killing it? Knocking it out of the park? I can help you with that too. We teach everything. But we don't just tell you that you have to do one thing. We have a discussion with you. We look at what your goals are. We look at the resources that you have, and we look at your lifestyle and your commitments and responsibilities, and we tailor a strategy specifically for you because you are unique. And we can 1000% help you with that as well. We offer courses on everything. We will teach you everything. We have experience in everything and provide you that accountability and that guidance and that hand-holding on every single deal, on every single step of the way to make sure that you're never feeling alone. You're never worried about misstepping. We are literally there with you every step of the way to make sure you don't make any mistakes. So go to reimasters.ca if you want to learn more about our 12-month mentorship program. Many of our students are here live with us on YouTube. I can see a few hallelujahs going up. We are so happy to be here every morning with you guys, and I'm looking forward to being with you guys tomorrow as well. Come join us tomorrow morning at 7 a.m. on YouTube live, and hopefully I see some of you guys tonight in Edmonton at the Edmonton Real Estate Investors Association. Google it. Get your tickets. It's going to be one hell of a presentation. See you guys tomorrow morning.
Bye.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.